Mister, everything sound good? Oops, let me straighten that up just a little bit there. Oh, I know you guys hate the orange extension cord. Let me get rid of that thing. Hey, so I just got back from Wild Waves up in uh, up there near Tacoma, up in Federal Way. What a great time we had up there. Kids wanted to go up there for end of summer for the older one's birthday, and never been to a slide park before. Like never been to a water park. Well, I've been to them. I just never actually experienced going down the slides before. I had taken the kids to another one, Great Wolf Lodge. Now, we went up there and it was super hot and it was super fun. I had a great time. Uh, the only thing I forgot to do was sunscreen my chest for some reason, and I burnt my chest. That I haven't had a sunburn in a very long time, so I get to experience that, which is really cool. Right, mamas? So anyway, all the kids and Sarah, she sunscreened up, didn't have any problems. So anyway, that was a lot of fun. All right, we got a bunch of people right away. Cool. So let's see. In this video, I wanted to talk about the inverted yield curve. Talk about how this inverted yield curve predicts a recession, and then whether or not this inverted yield curve is still a recession indicator, considering some of the things that we have experienced as far as well, I got to slow down. Maybe I shouldn't drink the coffee. As far as monetary policy should go. All right. So I left a few links down in the description. One of them is to a Wall Street Journal article. I know not everybody is subscribed to Wall Street Journal. So in this article, it was pretty much just kind of describing what the inverted yield curve is, what a yield curve, how a yield curve gee whiz, an inverted yield curve can indicate a recession. And then one of the things that I found in this article that I thought was peculiar is it had mentioned two things that I thought were things to look for. One of them is that it's not the inverted yield curve itself that is the real recession indicator. It's the moment that the yield curve uninverts, right? Because typically that's the moment that the Federal Reserve has stepped in and started to do their interest rate policy and manipulation schemes, whether it's stimulus or whatever. But that's usually when the Fed is finally stepping in, is after the inverted yield curve has taken place in the recession, and then the moment that the Fed does something about it, because what they're trying to do is, preemptively try to stop the recession from taking place. You have 2 quarters of negative GDP growth, and they know that something's up. So they start to step into it, and then the recession kicks in, and then they're already playing the game, right? So if you look at most of the yield curve inversions, the moment that it flips, right, the moment that it starts to go uninverted, right, basically revert back to its steepening curve, that's the moment that the recession kicks in, the real part of it. Now, something I found interesting when I have been doing the research over the last few years is about 4 years ago, there was an interview with Alan Greenspan. And in this interview, there was about 2 minutes of it that I thought were very, very, very telling, right? Because now a lot of people don't trust Alan Greenspan, and I understand why, Federal Reserve dude, whatever. Okay, so we take some of the things that he has to say, and we kind of consider what is happening today, right? Now, I'm going to leave links down in the description to 2 YouTube videos. One of them is the one that I had originally done like 4 years ago, and it got like 700 views, right? But it talked about this exact interview, right? And it was the first time I had talked about it. Now, 4 minutes into the interview with Alan Greenspan, they asked him the question about the inverted yield curve, and now whether or not this inverted yield curve is a recession indicator. And he says although he finds it to be a good indicator, right? But it's not something that he pays attention to, or it's not something that he uses, right? Or at least this is the idea that he kind of gives when they ask him about the 2-year, 10-year inversion, right? And then they ask him about a Larry Kudlow statement. Remember, Larry Kudlow was Trump's economic advisor, right? And he had made the statement, Kudlow did, that interest rates would never rise in his lifetime, right? That's what he said. And so if we think about like, some of those statements that were coming out about that time as well, Trump was trying to lower the inflation expectation, wanting to fire Jerome Powell for, not lowering interest rates and taking them into negative territory, saying that Germany with negative interest rates was a good thing. I mean, this was all the stuff that was being stated at the time. And so they ask Alan Greenspan, right? It's 4 minutes, 38 seconds into the interview, right? And they ask him about this, whether or not he feels that interest rates would never rise in his lifetime. And he literally says, wait a minute, say that again. And she was like, and he's laughing. He's just like, the look on his face is just hilarious, right? As, he can't believe like even this is even a concept. Like he's having a hard time even like, like, what did you just say? And so his response is like, okay, interest rates never rising. Yeah, I wouldn't hold my breath on that one. That's exactly what was a statement towards it. But then he goes in to start talking about it. It's about let me see, it's 5 minutes 23 seconds into the interview, right? And he goes in to talk about what his indicator is, the one that he's looking at, right? And he says that he would much rather look at the spread between the 30-year and the 5-year. And he said, this is corporate management's willingness to invest for the longer run. Right? And he says, when you see that widen, that gap between the 5-year or the 30-year and the 5-year, is what he says. When you see that widen, that's when you know that corporate management's willingness to invest for the long run. And so that's the indicator that I'm looking for as far as people asking me whether or not I'm going to invest into the stock market. That's the one. I'm not looking at the inverted yield curve as a recession indicator for two reasons. One of them is that the last recession that we had, right, the pandemic-induced recession, which was complete BS. There was a recession taking place prior to the pandemic kicking in. And the Federal Reserve knew it because they were already lowering interest rates, trying to combat the slowing of the economy from the interest rate hikes that they were doing. Prior to the pandemic, they were in a situation they were calling autopilot. Remember, they were raising interest rates quarter point every quarter for however long they needed to do it. They got it up to about 2.5%. The markets were pissed. Everybody was really upset with it. And they paused, right? And I remember like Peter Schiff coming out just screaming they reversed course. And I was like, no, they're sitting on their hands. But they did eventually did reverse course. So, I mean, I guess Peter Schiff was right. And they started lowering interest rates going into 2020, right? This was towards the end of 2019. So they were going into those into lower interest rates going into the recession. So the inverted yield curve at the time almost inverted. Like I thought it did briefly, but apparently, I mean, according to the article, it didn't. Now I can't remember, and I went back and looked, and it seems to me like it touched on the cusp of inverting, the 2-year, 10-year, the major indicator that everybody looks for. It was like right on the cusp, and then the stimulus packages kicked in and all that other stuff. We still had the recession, even though we didn't have the true inverted yield curve like a lot of people would anticipate prior to a recession. But it was well on its way. So like I guess most people would just kind of considered it have been inverted had the Federal Reserve not stepped up, right? Now, something I got to thinking about is that everybody is looking at the inverted yield curve in a way that is not the same as what we had experienced from the past. Like, we didn't have quantitative easing prior to the great financial crisis. That was the last recession we had that didn't have an inverted yield curve prior, or that had the inverted yield curve prior to the recession. After that, we didn't get one from the pandemic, although it came really close, right? Now, something I got to thinking about is just like, what is an inverted yield curve, right? So let's think about that. A lot of people not even sure what a bond is, or especially what an inverted yield curve is, or what a yield curve is, let alone being inverted. So I'm going to try and explain that a little bit and quite briefly so we can really kind of understand what it is that the strategy that, or at least the theory that I have as far as why this indicator may have failed, or maybe failing, failing to predict a recession. Now, when you think about a bond, like what is a bond? A bond is a loan from to the government, right? When you buy a bond, you are loaning money to the government. And when you think about a loan, on a long term, you end up having a higher interest rate attached to it, right? So think about like 30-year mortgage, 15-year mortgage. Generally on a 30-year mortgage, you're going to pay a higher interest rate than you do on a 15-year mortgage, right? So same thing for the bond markets, and especially when it comes to the US Treasury market. Now, when you hear like Treasury notes, Treasury bills, Treasury bonds, these are all essentially the same thing coming from the Fed, not from the Fed, from the Treasury itself. And it depends on the maturity of it. Whether it's maturing in a short term or a long term will depend on whether it's considered a bill, a note, or a bond, right? But they're all essentially loans. So now when we think about a yield curve, right, and the long term being a higher interest rate, totally making sense. Well, sometimes what ends up happening is that this, what is typically a steepening yield curve, will end up having the short term interest rates rise above the long term interest rates. And this is not typical of any kind of like lending market, right? You know, time is risk, and with risk comes reward, right? But now the idea of borrow or lending money to the government right now feels very risky in the sense that nobody is quite sure of what's going to happen here in the future. And so if you have nervous investors about tying their money up for the short term because there could be a whether a buying opportunity coming into the future as far as like maybe say better stock prices or real estate prices or something like that, and they have their money tied up with the government in a 30-year bond or 20-year bond, or I'm sorry, and they don't have it tied up in a 20 or 30 year, but a short-term bond, right? When they have it tied up in like in the short term, then they have to wait for that maturity to come back, right? So they have to wait for, you know, the month, the 3 months, 6 months, or whatever, and they may miss out on a buying opportunity of it. So that's kind of like the easiest way to understand why the short-term yield curve begins to rise. Now, when we think about like what's happening right now when it comes to the quantitative easing leading into quantitative tightening, and that's something that we really haven't ever experienced prior to the great financial crisis, which is everybody's kind of like idea or case scenario that they are using as the inverted yield curve being the inflation, or the inverted yield curve being the recession indicator. See, all that happened prior to the great financial crisis. But then after that, we started having quantitative easing. And something very different happened because now we have this massive balance sheet expansion and contraction that takes place, which is something that we didn't really experience prior to the great financial crisis. And so when we think about this inside of the strategy or the theories, then we all of a sudden have another player in the game that never used to be there, right? Who's also not necessarily manipulating, although that's a great way of looking at it, is a player within this yield curve as their balance sheet unwinds. So now when we think about the Federal Reserve and their quantitative easing, the Federal Reserve loaded up on an amazing amount of US Treasuries and mortgage-backed securities. Now, mortgage-backed securities is all about the real estate market, but the US Treasuries was all about funding the government, right? Giving them all the money to stimulate the, you know, the economy and all that other stuff during the pandemic. So now when we think about this balance sheet expansion, this is the Federal Reserve loading their balance sheet up with a bunch of treasuries and then issuing out money. And this is the, you know, money printer go burr, right? Now what's happening today is the opposite of what was taking place then. They're now allowing these treasuries to roll off their balance sheet, and they're bringing those liabilities, the dollars, back to the Fed, and then they disappear, right? They don't roll those things back over into new treasuries. Now, when you think about there being a player in the market up until they ended their quantitative easing program, that gave the market a whole lot of like confidence that there was going to be a buyer in the game, right? So if you bought a bond, you had no worries because you know that there was going to be another buyer out there. But the moment that you get concerned about whether or not there's going to be a buyer out there, well, then your expectations of liquidity start to fade away, right? You know, you're thinking, man, I could easily get in and out of this market. But all of a sudden, if you buy into these bonds and the interest rates begin to rise and you can't sell out of that bond right away without taking a loss, then you start getting very nervous about what's happening within the market itself. So now you think about this player, right? Unloading an amazing amount of bonds into the market, right? Or at least not playing the game of buying them, which has now got the market's perception of just like, man, we don't have this major player in there, which then elevates the risk of it. See, this typically wouldn't be there, this quantitative tightening program where the balance sheet unwinding is taking place. So because that's happening, it makes me wonder what is really taking place now within the yield curve, because it's artificially forcing the yield curve to invert, right? Now, not artificially because it's not, I guess, a manipulated yield curve, right? Because they're pushing this balance sheet, you know, uh, this balance sheet unwinding. And if they were going the other way, then we would have the quite opposite effect. But because they're playing this game, this balance sheet, unwinding, it's now forcing the yield curve to an extreme level. And it has been for quite some time. So that's the game that is different from any time that we have ever experienced throughout history. And it makes me wonder, is it really truly an inverted yield curve, an indicator of a recession? See, now I believe that the recession has already been pre-bailed out, so we can have this inverted yield curve and still not necessarily experience the pain of what a recession would typically be. So now, oh, geez, bees around me. Okay. So what we would typically experience during a recession, that's the most painful part, is high unemployment and then the bailing out of corporations. But I feel that this is like a non-recession recession in the sense that we're not going to be bailing out corporations. And even though we have a lot of layoffs, we're not seeing the unemployment rise. And this is something that we've talked about quite a few times on it. So now, did the Federal Reserve actually create, or the Federal Reserve and the Treasury and the government, or whoever the powers that be, whoever you want to call it, is there a situation that was created in which that they knew that they could take the yield curve by unwinding the balance sheet? They knew that they were going to force the yield curve to invert, but at the same time not stress the recession of it because they have already bailed it out with the corporations sitting on loads of cash, gorging on incredibly cheap financing during the pandemic, and then having an incredibly tight labor market that then allows for a lot of layoffs to happen while not necessarily raising the unemployment rate. So you see, like, this is another thing that it makes me question a lot of the economists out there with their theories and their strategies. Are they incorporating quantitative tightening into the inverted yield curve strategy? Right? I mean, that particular theory. And it makes me wonder, I don't think so. Like, I don't think, because it doesn't mention anything about the unwinding of the balance sheet within this Wall Street Journal article, although the article is very detailed and quite good. At the end of it, I thought about that, and I'm like, they didn't mention anything about they mentioned the Federal Reserve raising interest rates, but not necessarily the quantitative tightening, right, where they actually unwind their balance sheet. And I think that's a major contributor. Get these things out of here. Anyway. Wow, 20 minutes I went? Oh my gosh, 17 anyway. All right, I need to flip this hand. There we go, so that way I'm not in front. All right, there was a super chat. Let me go find that real quick, guys, and then I'll go read some comments. All right, William Richardson, thank you so much for the $20 super chat, man. That's very generous of you. Very cool. Thank you. Love the sunroom. I have enjoyed listening to you for a while. Thank you for sharing your perspective. Yeah, you're absolutely welcome, man. And thank you so much for that $20. Like I said, that's incredibly generous of you. Thank you for yeah, well, this is like, I'm not trying to be I'm not trying to put out information that I think you guys are going to like. Right? I mean, because I don't really, like, a lot of times I don't feel like I'm putting out information that you like. And considering some of the comments that I get, I know some of the information is stuff that you don't like, but it's the way I see it. And that's all I'm ever going to give you is the way I see it. And my perspective is honest. I mean, it's really truly the information that I have gotten. I don't try to use this information to make a bunch of money other than entertain here on YouTube with it to get the ad revenue. So yeah, thank you for being part of the whole game. Even like the other day, what was it, yesterday's video? When we were talking about the builders and all the reasons why the housing market is the way it is. I wanted to bring this up because I thought it was kind of interesting. One of the things that I saw in the comment of that video was a lot of people asking about the demographics issue, like the older population simply dying off, leaving a lot of inventory of homes, right? Because I had all these different reasons why the inventory level is the way it is, but I didn't mention the demographics of it. And I'm thinking about doing another video just on this idea because I hear it a lot that once the older population fades away, that we're going to have all these all this high inventory of homes that are going to be available. And when I think about like how many people are actually living at home right now and where they're going to live once their parents have passed away, like how far are they going to actually, or how much of this inventory is actually going to rise if they're living in the home that their parents own, right? You see, and so I guess it was something like 52% of people from 19 to 30, was it, or something like that, or 18 to 30. 52% live at home right now, which then leads me to believe, man, that's going to leave like very few empty homes when their parents pass away. They're going to already be living there. Now, whether or not they have to find another place to live or, have to pay for it somehow or another, that's another story to come. But that was one of the things that I thought about when people mentioned that demographics part. Okay, let's continue on talking about the bond market, though. I don't know why I brought that part up. Let's see here. Let's go down and read the most recent chat. Sorry, guys, I'm just going to skip down to the bottom here. All right, credit card interest is so exorbitant. Who needs it? All right, when is your election in the States? Hope you all get it right and dump Sleepy Joe. Might help to fix our issues here in Australia. Are those wiener sticks? They are. Look at that, huh? Good call. All right. I'm not gone yet. Still got 20, 30 years. All right. Let me cruise back up here to the top and get the real comments. Not the real comments, but the more. All right. Kevin. Hey, Kevin from Lakeland, Florida. Good afternoon, man. All right. Thank you, Simon. Have you ever watched MMA? I love watching MMA. All right. Sup, Simon? Good to see you. Although I like boxing more. And I like watching the old boxing matches, and I like it when like people break down and review the videos, like they break it down into slow motion and talk about some of the things that are happening. um modern martial artist, I thought, had a great channel. I haven't watched it in a while, but I think he did a great job breaking down some of these fights. And then Mind Smash, right? I like Mind Smash too. Very good channel. Lots of like, I mean, I don't know. I haven't watched his channel in a while either, but there was a time there that he had a lot of really good, like, philosophy kind of stuff going. All right. Love this MG or Megado Easy Street. Good for you. Dishes with the hearts. Thank you so much, Mama. It's different this time. It is different in a sense that there's quantitative tightening happening. I mean, that's different. All right. Take a breath. Yeah, thank you. You're so sweet, Dishes. Yeah, she is. She's the sweetest ever. It is different this time because AI is going to make you obsolete. AI is cutting out the middleman. I don't know. Can AI stumble through economics talks and stutter and still be entertaining as well as I can? I mean, can AI really replace me? All right. Charts don't fail. Yeah. 500 million in perfect harmony with nature. All right, yes, for sure. Failed inverted yield curve and failed VIX indicator. All right. Oh, the dice. Yeah, got the dice there. Bro, what happened to your Toyota? Did you finally get sick of it and get something new? Nope, it's right there. I can see it around the corner. I just haven't driven it because I had the Explorer and it hasn't been driven for a while, so I thought I would drive it around for a month or so and see if anything comes up. It's a 98, so I'd imagine there's going to be sensors and all kinds of stuff that are going to start, going out in it. So anyway, so I've been driving that around and not so much the Toyota or the pickup, but I still have them, because when you drive POSs like that or you drive an old vehicle like the 98 Explorer, even though they're good vehicles and they run, a lot of times they end up breaking down on you at the most inconvenient time, like when you have to go to work. So you got to have a backup, and now I got two backups. All right. Let's see here. Hello, UE. How do you think the yield curve will uninvert? Will the short-term yields go down to meet the longer-term ones, the other way around, or somewhere in the middle, and why? Yeah, I would imagine that the short-term interest rates would probably move, because the long-term interest rates are harder to move. I mean, it takes a lot more time to push the longer term yields around. The Federal Reserve can really mess with the short term interest rates a lot faster and easier. And the same with the Treasury on their issuance of it. So, how do I feel the yield curve will uninvert? I think it's going to remain inverted for some time, and the uninverted part will come much later when the Federal Reserve actually does adjust their interest rate. So it's probably not going to happen until the Fed starts to lower interest rates again to meet their 2% average inflation rate over time. But again, like I'm not really looking at the yield curve as my indicator anymore because I feel that it's not necessarily as good of an indicator to predict what the economic outlook is going to be as much as I'm going to believe Alan Greenspan, which I know a lot of people are just going to be shaking their heads and rolling their eyes at me at this one. But still, I'm going to keep an eye on it, if nothing else, and remember that Alan Greenspan had stated this particular indicator of the 30-year, or I'm sorry, yeah, the 30-year, 5-year spread widening. And that if you see that taking place, then that is a good indicator of decent economic outlook, right? So now I've never heard anybody really say that before. Like, I don't know. I mean, maybe there's other people out there who talk about that particular indicator. I've said it, I don't know, 50 times here on this channel and exactly where I got it from in the interview that I got it from. And the link is down in the description. And it was at 5 minutes and 23 seconds into that interview that you can hear for yourself. But to me, that's going to be the indicator that I'm going to look for. All the rest of them, I think, are now, I'm not saying that they're bad indicators. I'm just saying I don't think they're necessarily as telling as they once were. And so whether or not this other indicator, this 5-year, 30-year spread, if that's a decent one, I have no idea on that either. Right? I mean, I'm just guessing from the things that Alan Greenspan was saying, and considering that nobody else that I've ever listened to or read articles about or anything has ever mentioned this before. Right? So I'm going to keep an eye on it. Right? And if things look good at that point, then I might be like, hey, now's my time to invest in the stock market. Is that 2 years from now? Who knows? I mean, it might be 6 months, it might be 2 years. I really have no idea. And I'm guessing it's probably going to be more like the 2-year mark. All right. It's hot. Nobody wants to sit in the truck. That's for sure. And I just drove like 2.5 hours to get here. So, all right. AI time has not come yet. Curb your enthusiasm. Yeah, I don't know. I'm still like, I mean, everybody keeps talking about it, and I'm the type of guy. I'm the type of guy that I don't consider, like, people will talk about, hey man, we're going to build this house, right? And now I've framed a lot of houses. I worked for a company that did quite a few of them. And I remember, like, plans, seeing plans, looking at job sites, talking to people about framing a house. And we never, like, it was all talk. Like, it was a project that somebody was going to do, or at least it was a good idea coming into the future. And there was plans for it. But until you're actually on site swinging hammers, the job doesn't exist. Nothing exists, right? Until you're actually there doing it. So when I hear the threats of AI, and I'm like, okay, well, let's see it, right? I mean, I'm reading articles about how, what was it, Black and Decker tried to set up an automation for building some kind of wrench or something like that. I can't remember what it was. But I remember reading on this, and I'll look it up. I'll go see if I can find the article and maybe and post it somewhere. But they were trying to automate this factory, and it was just on them. Like everything about it was just horrible, and the tool that came out wasn't very good, and so it was just like it just wasn't a decent product by the end of it, and they just shut the whole operation down. Now give it time, and it will be a better product that comes out of there. I'm sure of it. But just like electric cars or anything else that's new to the game, it takes a while before it actually becomes so efficient that that's the way of life. Until then, it's still the old way, and it's still going to be that way. Like fuel efficient Toyota cars, right? I mean, there's no cheaper transportation possible that I could have than a 99 Toyota Corolla that I paid $500 for that gets, 28 miles to the gallon. Like insurance, maintenance, gas, all of it. Like the cheapest transportation there is out there. So, anyhow, moving on. Please use this hand. All right, hit the like button, yeah, guys. Yes, please do. We got 81 likes, 238 people watching. Go hit the like button, please. Yes. Yes, people, come on. 139 watchers and only 39, 32 likes. That's ridiculous. Don't be lazy. No, they're not lazy. They just need to, they just need to be asked every once in a while. Would you please explain the 30-year, 5-year spread again? I didn't understand what you're describing precisely. Okay, so I don't know. Maybe I did. Maybe okay. Let's do it again. Um, so the bond market, right? So that's easy enough to understand. If you don't understand the bond market, it's going to be a little difficult. But the bond market has a short-term maturity and a long-term maturity to it. So the short term, all the way down to like say 1 month, all the way out to 30 years. And now the 5-year, 30-year spread, the yield difference, right? So if they're in right now, I don't know, I should have probably looked it up before I started the video. But right now, if I remember right, they're very close to being like flat, isn't it? I mean, or just slightly inverted. Um, but the 5-year, 30-year, the yields on those two. So we're just going to pull a number out of nowhere, 4%, right? So let's say both of those are 4%. If the 5-year goes to 4.5 and the 30-year is at 4, that's inverted, right? Typically, the short-term maturity would have a lesser yield to it, right? Just like a mortgage rate or anything else. A 30-year has a higher interest rate, a 15-year has a lower interest rate. But if that is inverted, then you would have a higher interest rate on the shorter term maturity, right? So say the five year has a 4.5% yield to it, and the 30-year has a 4% yield to it. When that starts to widen, meaning that the 5-year starts to fall, the yield on it goes from 4.5 to 4, down to 3.5, down to 3, and the 30-year is at 4%. Now that spread is starting to widen, meaning that the 5-year is starting to fall and the 30-year it may not even be rising, it may just be standing still. But because the 5-year is falling, the yield is, then the spread is now starting to widen. So if you looked at it on a graph, you would now have a wider spread between these two. If the 5-year continues to fall, this widening spread is the indicator that corporate management is willing to invest for the longer term. At least that's Alan Greenspan's way of describing it. At least that's the way I understood it. And I don't even know, to be honest with you, I've heard this a bunch of times and I've asked people to explain why this is the indicator or why this is showing corporate management's willingness to invest. I don't understand. I don't know, right? I did get some people who had some pretty decent responses, but I don't know if I quite understood exactly the real reason why that's the indicator, except that, they just see better economic times going into the future and that would be the indicator that it's happening. So, anyway. Is this live a deep fake? Why would it be a deep fake? All right. Between the 5-year bond and the 30-year bond, the difference, how inverted it will get, decide to invest in Brody. All right. Let's see here. 2020 inverted ice cream. So good, yeah, baby. I know what a bond is. It's something you pay to get out of jail. Yeah, right. All right, 2019 inverted. Manipulated market. Yes, yes, yes. 3 months treasury yield became higher than the 10-year on May 23rd. And except for one day in July, it remained inverted until October 10th for a total of 4.5 months. 2019. This is so interesting. Thank you. All right. No, that's impossible. All markets are fundamentally fair and cannot be manipulated. Never. I think quantitative easing in itself is the epitome of manipulation, is it not? I mean, to say that you're going to step in and buy like an insane amount of treasuries and everybody knows it and they know that you're going to use a printing press to do it. I mean, how is that it's just it's just a world of manipulation as far as I'm concerned. This is how is the game played. All right. Loaning the same people money that makes the money makes no sense. Yeah, That's pretty cool, right? I mean, how it is that you can use good debt to excel yourself so far away from the working class. It's incredible. Everybody should learn how to do that. All right. Your dice are 6, 6, 3 plus 3, 6, 6, 6. Wow, people keep saying that. I guess they're right. It's all about the way you look at it. Yeah, what meaning you give it. All right. 18-wheeler needs to lay off the meth. All right. It's all in your head, friend. Okay. Someone is closed-minded. Okay. The car, bro. What happened to the Corolla? Like I said, I still got it. No worries. All right. I don't think we have had QE and rate hikes at the same time. No, we have quantitative tightening and rate hikes. We had quantitative easing and rate reductions. Like, I don't even know if those two could even work together. Like, I think just the idea of doing quantitative easing is the way that interest rates fall, is the way that the Federal Reserve lowers interest rates. Um, so, yeah, I mean, they just work hand in hand. If this is satanic, leave and go take a shower in holy water. All right. I bet flat earthers said the same thing to Galileo. Galileo. Jeez. I have some words I just never gonna be able to say. All right. Did you know the people from the Challenger are still alive? True story, using the same names too. All right. Did you know Donald Trump and Joe Biden are still alive? All right, cool. Another super chat. That's better than some of these questions. Okay. Hey ho, let him out of his car. All right. Let's go find that super chat. All right. Thank you, Foong Lee. Thank you so much for the $9.99. Just want to say thanks, UE. Really appreciate your work. Well, thank you so much for that $9.99. I appreciate you, and I appreciate everybody who is here, hanging out. We got 236 of you. We're talking economics, trying to figure out the inverted yield curve, and putting all the work into this is, something I just feel is like I have to do it. It's like I can't help myself. Even going off and hanging out with the family this weekend while everybody was relaxing in the hotel room, I was going down and making a video down in the car. So yeah, I appreciate every one of you, man. All right. If I was the Fed, I would be laughing listening to these talking heads. Good day from Melbourne, Australia, mate. All right, well, good day. If you invest in the U.S., you're investing in reparations for. Oh, okay. Any comment on QE and rate hikes happening at the same time? I don't see how that's possible. Like, I mean, I guess it is possible out there. I mean, it's not like, impossible, but it would be such a demand. How would that work? It would have to be such a lack of demand for U.S. Treasuries. It would have to be more people dumping U.S. Treasuries than the quantitative easing could purchase. That's what it would take. It would take like the entire world dumping treasuries at the exact same time, and the Federal Reserve attempting to mop them up at a pace that could not keep up. Okay. And then you would see interest rates hike at the same time of quantitative easing. But I don't know how that would be. Like, the moment that the Federal Reserve says that they're going to be buying bonds, the whole world is going to try and front run them. And they're going to be like, well, if they're going to be buying bonds, I'm going to buy them ahead of them and then sell it to the Fed, because that's what happens. That's how the corporations ended up getting funding during the pandemic, right? Was with the special purpose vehicles. I mean, I talk about those special purpose vehicles every live stream, but that's ultimately what happened. Like, the corporations gorged themselves on incredibly cheap debt, and now they're sitting on cash to get through the slow times. All right, let's see here. Let's cruise here a little bit. I'm trying to get as many comments in because I know you guys are commenting like crazy right now. Let's see. Sup, Simon? Nice to catch one of your live streams once again. Well, thank you, Jose, man. Thank you for being here. Let's see here. For the purpose of living at home. Man, dice again, 360s. Boy, you guys are on those sixes, huh? All right. Dudes don't call other dudes mate here. No, they kind of don't. All right. Greetings from UK. As electric car market broke the car market in the in the USA, no one knows what to do here as they not quite there yet in terms of range or charge speed. Hence, no one's buying any car. Yeah, I was reading a story. I'm sure a lot of you saw it about the guy who bought that Ford Lightning and just had a nightmare of a trip with his family with it. Like like something right away, like something happened, like he damaged the bumper or something, and it took him like 6 months to get it back. And then he went on this trip and got to like a location that had like two places that he could quick charge his car, and they were both like shut down, like he couldn't use them. And so he had to get on like his trip. He couldn't sit there and wait for his car to charge without the quick charge. So he ended up leaving his vehicle and going and renting a car so he could use a gas operated vehicle to get the rest of the way. And I just found this to be like, I mean, I felt bad for the guy, you know, just from the story that was being told. But I mean, I found this kind of hilarious about like, you know, everybody pushing how grand of an idea these electric vehicles are. But a lot of times what I hear is nightmare stories about what a pain in the ass they really are. And, you know, just like anything, you know, when they're first introduced, they are, you know, they don't work right, or you know, they have issues or whatever happens. Eventually things get better, right? You know, as time goes on. Oh, right. What happened to regular Toyota car? Man, you guys just love that Toyota. It's too hot to sit in the Toyota. Hey, Yui, what are your thoughts on Harbor Freight? Like Harbor Freight products, or is there something going on with Harbor Freight? Yui took the dice out of the car. Yeah, I figured you guys probably want to see them, but apparently not because they're all just loaded with sixes. All right. Um, they nerfed the AI after people began getting scared. All right. So-called EVs are POS. Don't say that. POSs are like the Toyota, right? Don't POS, man. It's driving a POS that'll make you rich someday. All right. My bank solicited me a $50,000 loan at 4.7 for as many years as I decide at the cost of signing my house away. In this economy, my answer is no way. You know, what would you do with the 50 grand? All right. What? We are in bread and circus phase of the empire. Nasty times ahead. All right. What can't determine? We can't determine if the yield curve is vacation yet. An inverted yield curve drains liquidity. It uninverts at more default happen, and debt gets cleared. Yeah. All right. Talk about new car prices. I don't know about new car prices. I don't shop for new cars, so it's like, you know, people ask me about the new car market all the time, or ask me about the, you know, the car market, and I don't know, like I look at vehicles like they're disposable, you know, because there's just so many of them out there and they're cheap. Like, you know, they weren't necessarily cheap, you know, during the pandemic when the used car market just kind of flew through the roof, but there's plenty of like little cars, like crappy cars out there. Nobody wants to drive them because they don't look very cool in them, and I understand that. I mean, you know, if I wanted to look cool, I'd probably drive me a nice new Camaro, you know, and make the payments on it or something like that, and I would look way cool, you know. But I don't really know how effective being cool is going to be on my life like that. I just not sure what that's going to do for me, except for drain my bank account and keep me from making investments. So, you know, I don't need to look cool. I need to make investments and be smart with my money. And so driving a Toyota and, you know, the old S10 and now this Explorer, my driving expenses, I mean, I pay more for insurance than anything else, and still the insurance on the three vehicles is probably cheaper than the full coverage insurance most people pay on their new truck. So again, like my cost to travel is very, very minimal, you know. But that's what I know about cars, you know. That's All right. All right. Do you think Ben Bernanke deserves his Nobel Prize? For what? I mean, I don't understand why some of these people get their Nobel Prize. I don't understand why Obama got his either. He didn't do anything for it. Like, I couldn't understand why he got it. Like, I mean, there's all kinds of stuff that you could say after he was president that you want to, go ahead and give him praise for. I mean, I'm not a fan, but whatever, I mean, there's all kinds of stuff that you could probably go. But he got the Nobel Prize. He didn't do anything yet. Like, what was it that you were getting a Nobel Prize for? Like, being cool? I mean, he should have drove a Camaro. But I didn't understand that. So, like, to me, the Nobel Prize it's pointless. I mean, I lost respect for it a long time ago when that happened. I mean, it needs to go to people who are deserving it for a particular thing that they have done. Like to say, hey, you know, whatever. I mean, he didn't have anything. That's why it kind of got me, irritated with it. So, Bernanke doesn't. I don't know what he would deserve. In 2001, he was talking about when the Fed funds rate hits the lower bound of zero and what the Federal Reserve was going to do about it. And they ended up doing exactly what it said that they were going to do inside of that speech, right? They used credible threats and they, you know, conduct the monetary policy through forward guidance, right? And this is exactly what Ben Bernanke said that they were going to do. So does he deserve like a Nobel Prize for that, or coming up with this scheme? Being able to tell the best lies, I guess, or not even lies, or just like just being threatening. I don't know. Like I. I guess, I don't know. Is that a monetary policy? Is that worthy of one? I mean, I don't know if that's the case. Like, I don't look at it like that. Yield curve has little to do with macroeconomic than it does with the midterm financial conditions. Financial conditions affect the economy down the line. Yeah, I kind of agree with that one. Hey Matt, what's happening, man? Did you see the news about strategic petroleum reserves starting to be refilled? I did see something about that. Yeah, this will likely put a floor underneath oil prices. Yeah, I mean, it already seems like it has, right? But then oil prices are right now, what, $80 a barrel? And like we saw them hit $150 a barrel back in like 2005 or something like that. I forget how long ago it was. It was a long time ago. So really, like oil prices even today are sitting at 50% of their all-time highs. Now, granted, the reflection into like the gas prices doesn't seem to like coincide with the price of a barrel of oil, but you know, when you think about it as far as the commodity markets go, $80 a barrel seems pretty low on a historical, chart. All right, where's the Sunday night beef bingo? The Sunday night meat bingo. I'm going to be doing it here in a few hours. So if you happen to be in the Astoria area, head on over to the Workers. It's under the bridge in the middle of Astoria. Starts at 6:30, runs till about 9 o'clock. Last week we actually had Dylan in Morgan, right? Pretty sure. Boy, I feel bad if I forgot his name. I'm pretty sure it was Morgan. But yeah, they hung out and played bingo. Both, longtime fans of the channel. And it was funny because they both showed up, not like this individually. They just both happened to be there at the bar. Dylan he was been traveling around and just, made the venture out here to the coast to come and meet me, which I thought was very cool. So Dylan and I went and grabbed lunch and shot the breeze for a little while. But Morgan just happened to be there, just to go in and have a drink or whatever. And I just stumbled in to call bingo. He's like, oh man, this is the place, right? And so anyway, we ended up hanging out and talking until, I don't know, 10 o'clock or so. And then, yeah, so go check out bingo. It's a lot of fun. All right. When listening to various sources on the economy, one thing I don't hear is how much available work there is for anyone willing to hustle. No matter how bad things are, there's always work today. I have a buddy who is probably the greatest hustler I have ever seen. He would buy and sell stuff off the internet all day long. And, I would just ask him, man, where'd you find that? How'd you do that? Where'd you get it? And he was just like, man, you see me sitting here doing this all the time. Like I do it every day. I sit there, he scrolls through Craigslist, the Facebook sell sites, whatever. I mean, just anywhere that he could find where somebody is selling something, he is scrolling through it and he finds these things that he finds good deals on them, and then he makes ridiculously low offers on it. And he's good at talking to people and buying stuff. So he ends up flipping cars, and back before where, like, years ago when firearms were a lot easier to move, you could, without having to do all the registration and stuff like that, like you do, like you're supposed to do now. But back in the day, it wasn't illegal to just sell firearms to your friends or whatever. And so like there would be a lot of times he would sell firearms or something like that, or just whatever happens to come up. And it was amazing. Like what was another good story that, oh, he found a place that he could get hay really cheap, right? Some sort of like hay for like feeding the barn animals, the farm animals. And he found like this really cheap source of hay. He was able to travel like, I don't know, wherever it was with this big old trailer and come back with like an insane amount of hay that he bought cheap, and then he would sell it for, just under what everybody else was selling it for. This guy was a money maker. He would just, wherever he could find it, he would go and get it, and never really held like a regular job. Just did hustle. That's all he did, and he was good at it. All right. How will college bills in autumn affect other prices? I don't know. I'm still curious on how many people are actually going to pay their bill. All right. I mean, we have to see what the effects of something like that are. I mean, I really don't know. It's going to depend on how many people are actually going to do anything about it, and then what kind of repercussions they face if they don't. I mean, there's all kinds of what ifs that are going to happen in that. I have government treasury bonds mix. I've lost 2.83%. Wow. All right. World finance, less money to spend on like only fans for guys, less money for restaurants. Okay, let's see here. Talking about females. Okay? Is there anything? Okay, y'all should go watch Every Day or Dishes Every Day. Hey, all-nighter. I'm here from the ice skating with my daughter. Well, that's cool, man. It's a nice, fun little thing to do. I don't think I've ever been ice skating. Oh, maybe when I was a little kid I did it. Thanks for all the work you do, Simon. Yeah. All right. Is inverted when you're bent over backwards or bent over forward? Project Sandman. Oops. Good to be seen, Deja. All right. Hit the like, you lazy slackers. Hey, thanks, Tom. All right. Skating and typing is not something I'm used to. Yeah, I'd be breaking my phone if I was trying that. All right. Yes, thanks, Tommy. Do you think crypto has a future? Well, do I think crypto has a future? I mean, in what way? Because, like, I mean, a lot of times I hear people say that Bitcoin will never last, Bitcoin will fail, like Bitcoin won't, isn't real or whatever. Bitcoin's still here, right? I mean, Bitcoin's still here, it's still doing its thing, and there's still other cryptos out there. Now, I know a lot of times people will hear like these news or see the news or whatever, and they're talking about some exchange that's failing, and it's like everybody's losing all this money and people are talking about Bitcoin's failed, right? But that's not Bitcoin. That's some exchange that's screwing around with Bitcoin. The Bitcoin protocol still works. I mean, as long as that continues, I mean, does it have a future? Yeah, sure. What kind of future? I don't know. Like, will it actually take part in like banking systems? I mean, I don't know if necessarily Bitcoin will, but certainly, digital currencies of some sort, whether it's central bank digital currency or something of like a stable coin kind of fashion. I do believe that cryptocurrencies of that fashion do have a future, and they're already on their way. So, I mean, it's not like those things, like the genie's out of the bottle, right? It's happening, or the cat's out of the bag, or whatever you want to say it. All right. All right. It's the future. Toilet. All right. Definitely not failed. It was inverted for 18 months in 2008. started Q4 2005. All that stuff was prior, that was prior to the Great Financial Crisis, right? After the Great Financial Crisis, where we had balance sheet expansion. I mean, you got to think about it. The balance sheet expansion from quantitative easing 1, 2, 3, and 4 was by far more substantial on a percentage basis than the recent quantitative easing that we have experienced during the pandemic. And a lot of people don't look at it that way. They just see this giant number that was printed, which is true. It was far more money printed. But on a percentage basis, the Fed had taken the $850 billion balance sheet to like $4.7 trillion. I don't know, quadrupled. I don't even know more than that. It was like 5 times the balance sheet expansion. The recent quantitative easing doubled the balance sheet. All right. So on a percentage basis, the 850 billion to 4.7 trillion was far more quantitative easing than the recent rounds that we had experienced. And it didn't, and that's what's crazy. Like, a lot of people just look at all this money printing and say this is what's caused inflation, but very few people want to explain why quantitative easing 1, 2, 3, and 4 failed to produce the inflation scenario that the Federal Reserve was looking for, even though it was far more money printed on a percentage basis. And the reason is because it ended up more as on the big bank's balance sheet, and unless that money was actually lent into the system, it never really actually the system. So. All right, so what happens to all of us who don't own anything? We ain't happy. All right, I don't know, Prozac. Let's go find those super chats. Did I miss one down there? Let's go. Self-healing. Thank you so much for the $5. How much longer until the dollar loses its reserve in the world? When will the BRICS digital currency launch, and when the Fed coin starts here? Okay, so I think that if the Federal Reserve, if the dollar loses its world reserve currency status, then I don't think we're necessarily going to have a Fed coin either. I think it's a one-way street that doesn't necessarily reduce, right? I think it's going to either expand or crash, right? One or the other. Now, thinking about the BRICS, right? This is something that I find very interesting. It's like people are stuck really on this idea that the BRICS are somehow succeeding at what they're doing, right? And now what I wonder is, like, what exactly is success when it comes to what's going on right now? Because a lot of people look at, like, the BRICS excluding the US, and like the US is going to be left out in the cold somewhere someday, right? And then there's going to be no United States and no, like, world authority or anything like that kind of happening there, and we're just going to be kind of like this ugly stepchild off to the side over there, right? And that's kind of what a lot of people are focusing in on, as if that's the outcome from this. And I guess that if you condition yourself to expect that outcome, then that outcome will probably come to you, right? But now, it's not, in my opinion, going to go down that way. In fact, we just did a recent video talking about how the BRICS efforts are actually forcing manufacturing back here to the United States, which is going to be something that is going to be hurting the BRICS nations if they are thinking about selling their products to anybody other than themselves. And now, I know all the BRICS nations would love to sell their products to the other BRICS nations out there, but I don't think all the BRICS nations are necessarily wanting to be buyers of all the rest of the BRICS products. You see what I'm kind of getting at? Is that they are all wanting to be producers, sellers. We're the only nation in the world who wants to be a consumer, right? Or a consumer on the level that we are. And so when you think about, like, the BRICS are saying, hey, we want the United States to suffer and die, what they're basically saying is they want their customer to suffer and die, and then they won't have a customer anymore, right? And that's really what's going to happen there. Now, as this starts to take place and the dollar loses its world reserve currency status, and people are like, man, I don't like the dollar, piss on the dollar, get rid of the dollar, that's going to actually strengthen the dollar. And that's something that is very difficult for a lot of people to wrap their heads around. I mean, Jeff Snyder and Brett Johnson are probably the two top people to watch if you really want to understand how it is that the dollar is going to strengthen into a time in which that people are trying to get out of the dollar. Because you think about it like this, right? if you're trying to get out of the dollar and you don't want to use the dollar anymore, how do you get rid of your dollar denominated debt? Like, you're like, okay, I got this dollar denominated debt and I need to get out of it so that I can get out of my dollars altogether, right? You have to acquire the dollars first. You have to acquire the dollars and then pay off your debt. That right there will strengthen the dollar just to try and get out of the debt itself. Now, when we think about the dollar denominated debt that already exists out there, the dollar denominated debt is used itself as dollars. So when somebody writes up a contract, hey, I promise to pay you and $100 into the future, rips it off and says, here's the contract for it, and you get and they hand the $100 over. Now there's the actual $100 and there's the contract. That contract itself can then be used as if it was dollars, right? And this starts adding to the amount of dollars that are available out there for people to use. Now, as these contracts disappear, dollars begin to disappear out of the system, which means less dollars out there to be used, even strengthening the dollar even more. So these contracts disappearing are causing the dollar to strengthen. At the same time, people are trying to get the dollar to get out of those contracts. So all of that is going to cause the dollar to strengthen. Now, let's think about you're sitting outside of the United States and you have a pile of dollars and you don't want them anymore, and neither does anybody else. All right? No other nation wants them. The only nation that wants them is the United States. So now what are you going to do? Are you going to invest in the stock market, the real estate market, or are you going to start buying a bunch of products that come from the United States? And so this is going to start increasing the manufacturing and the output of what can happen here in the United States, as people are simply trying to get rid of their dollars by spending them in the United States, but they're going to be strong dollars, and those strong dollars are going to be increasing our manufacturing base. Now, whether or not that all happens, that's what I see taking place. Now, as people are saying piss on the bricks, I think they're actually trying to push this idea to get people out of the dollar, and it will actually strengthen the dollar and bring manufacturing back to the United States, and it's all a mind trick. And I don't know if anybody else is talking that way. I'm probably the only delusional one who sees it like that. But it seems to me that's what's happening here. Because you think about it, all media is propaganda, right? There is no media out there that is like free for the people to just like consume on like whatever idea that they feel is the appropriate one. No, it's guided, right? Think this way. Choose between these two people, right? Or these are the two ideas. Here, let's throw an argument out there right into the news media so that you can have this argument already in your head, so that the moment somebody brings it up, you're ready to fight with them about it. And don't appreciate or approve of anybody else's opinion, because it's got to be guided this way. That's what mainstream media does, right? I mean, when I look out there at a lot of the news articles and stuff that I see, I take the bits and pieces of information from it. Now, maybe, in a way that's like my own way of blocking, out a lot of information. Maybe that happens, right? Where I'm not taking in all the political, side of things that people could totally see as the reason why the economy is the way it is. I look at it from a banking point of view, because I don't think the bankers really give a shit what's happening in politics. Personally, and I think that if anything, the politicians are helping out the bankers in a lot of way by using the mainstream media, right? A lot like Donald Trump trying to lower the real interest rates by screaming there's no inflation. Then the Fed should be printing money. That was their attempt to keep raising the real interest rates after the Federal Reserve had paused. I mean, this is the way I see it anyway. I mean, I don't know how many other people look at it like that, but I'm sitting back going, why in the world is he saying this? Doesn't it seem foolish? Like, if you were to go out right now and say the Fed should be printing money and taking interest rates into negative territory, if you were to say that at any time, would it seem reasonable? I mean, just even if you don't know anything about the economy, just the words themselves don't seem right, do they? I mean, it's just, anyway, I mean, I think there's another super chat down there. Let's go find that. Oh, Redazon, thank you for the $9.99, man. Thank you very much. UE is off curve topic, but not curve to you. Lots of laughs. Japan rebuilds their homes every 20, 30 years. Maui homes age 70 years, average age 70 years. If Maui rebuilt every 30 years, would the fire not been so bad? Oh, are you thinking with modern building techniques or something like that? Like to prevent the fires? I don't know. I mean, I would imagine because older houses have a tendency to burn fast, especially if they're wood constructed homes. They have a tendency to burn up pretty quick. So I guess if they were modern homes, they might have been able to say be a little bit more fire resistant um, in a lot of cases. So I don't know if necessarily that would have been the case, but I mean, thinking about it, like a 70-year-old home would be a hell of a lot more combustible than a than a than a year old home. All right. Big fan, Yui. Thanks for everything. Hey, well, thank you for being here. We got 259 and 161 likes. Go hit that like button. We'll get more people up here into the chat. All right. Could you tell us what thermal jacket you have? I'm in the same region and kind of want one too. What are you talking about? The electric jacket? Is that the one? Because that's the one that I wore last winter. Milwaukee brand, like Milwaukee Tools. I don't get paid to say this or anything like that. It was just because you asked. But that's the one that I got, and it was like I don't know, $200 if I remember right, and it was really nice. I mean, talk about like really convenient having a heated jacket for like even something just as simple as going out and getting in your car. Like most people now, like I have old cars, but most people start their cars and heat them up before they even leave the house. But you know, I'm old school, so I have to go out and actually start my car manually. And it's always cold when you go out there in the middle of the winter. But when you have that, nice warm jacket on, yeah, it's awesome. It's just a nice, comfortable ride. All right, 270 up in here. Nice. Good to see you all here. All right. Just tuned in. Where is Simon? I'm used to the truck. Nice change of scenery. Yeah, I'm sitting here in the patio overhang where I have the barbecues and stuff out here. All right, student loan borrowers can have their paychecks garnished. I had a coworker whose check was garnished because he co-signed for his stepdaughter who didn't complete college. Oh man. And that's the problem with taking out debt is having your wages garnished. Like I remember I had a lot of debt at one point and I was just like, ah, screw it, I'm gonna pay it. I didn't have any money anyway, so I just didn't care. And I remember it was medical debts, and they finally sent me to collections, and I was like actually in pretty good communication with my boss, and I'm like, bro, I just got a notification. I'm in collections, and he was just like, well, I haven't seen any paperwork yet, so I'll let you know just as soon as I see that. And I'm like, man, thank you. And so like I'm trying to work with this adjuster and trying to deal with this debt. And I just remember like he never did garnish my wages, but he threatened to do it. And my boss was really cool. He was just like, yeah, I'll tell you as soon as it happens. But it didn't get to that point, luckily. All right. The institute has replaced Simon with synth. Calling 12 on the die. There you go. See, that's much better. All right. English, what be whose check? All right. I don't know what that means. All right. Does inflation mean anything anymore? Landlords can charge rent more than what anyone can pay because of artificially high real estate prices. Wages no longer match cost of living. Yeah, but that's the natural course of things, unfortunately for the situation here, is that there's a lot more people than there is available places to live, and this is actually part of the Cantillon effect, and that you can see when the system has an abundance of money in it by the incredibly high rents and leases that people will pay. And that's what's going on right now. And it's just an unfortunate consequence. It's not like any kind of, that's where like I find it not necessarily like amusing or anything like that, because it's very much the way that I used to look at things is like they caused this, like they did this, or they are doing this, or they, and that is like an external expectation. It's failing to understand the situation and then trying to look for blame on the outside, right? And now it's not a pleasant situation, right? Because I mean, hell, I know it's just like, you barely make any money. It's hard to make ends meet. You're wondering where it is that you're even going to come up with enough money to go buy a roll of toilet paper with. I know that feeling, right? And that's the way like most people live is in that condition. And then when you're sitting in that condition, you want to blame. You want to say, man, this is the reason, that's the reason, and you focus in, man, if I just had a better politician in here, if I just had a better job, if I just had a better life or whatever going on, it's all this external stuff that people will end up looking out at. And then really, when you look at it that way, it makes it very difficult to see things for just the way they are, and that this is just the situation that it happens to be in. And it's quite unfortunate, right? And like whether or not you're trying to find, and if you're trying to find somebody to fix it, you're going to be in a long wait. There is no fixing it. It's a matter of understanding what's happening and best position yourself to deal with it. Now, when it comes to the rents and leases and stuff, there's not, I mean, I don't know of a way other than bringing in new inventory through mass production of homes. Is there any way that prices are going to come down? It's a supply and demand issue. And so long as you have a supply and demand imbalance, you're going to have prices that are going to be incredibly high no matter what official or anybody else you bring in. Like it's the way it is. It's part of the economic forces that are at play. I mean, if Cantillon can describe it from 200 years ago, then things haven't changed, and that it's just the unfortunate situation that a lot of people are facing. It's one of the most important reasons why, as you're young, to start investing in compounding interest, investments right away, early, right? So you can take advantage of your youth, because by the time you get older, it's too hard. Right. I mean, even now I find it very difficult to, with everything that I, got going on, I mean, we got a YouTube channel, a regular job, got things like, happening. It's very difficult, right? Especially the area that I'm in. So I can't imagine just having a regular job, making ends meet. It won't work like that. You got to have all kinds of things you got going on, right? And most people just occupy their day with 8 hours of attempting to earn money, and then they leave the rest of it to, I don't know, playing video games or just screwing off or doing whatever. I mean, there's a lot of time in within a day, and most people just don't take advantage of it. Simon had to downsize. I don't know. All right. This time they sent the stimulus money right to the people, bank accounts, not to the banks. Yeah, and they severed the. See, now that right there, if you just hand over a bunch of money to people, it would have caused a quick shot to the economic output, right? Like there would have been all kinds of economic activity happening out there. But I doubt it would have created the inflation scenario or any kind of real lasting inflation scenario without the severing of the supply chain. It was the combination of those two that really did it. Now, when you think about like the inflation sticking around, the supply chain, in my opinion, never did quite ever come back. Like there was like even just recently they've had issues with the longshoremen's and all that other stuff. So like the supply chain never really did come back into functioning the way that it had prior to the pandemic. And so as long as you have this severed supply chain or a disrupted supply chain, then you're going to have issues within it that are still going to create like, inflationary type scenarios, especially when it comes to the availability of products. We could see where there's plenty of stuff out there that became totally available. I mean, the Freightline trucking company, which was in mass shortage during the pandemic, is definitely oversupplied, and you start seeing, trucking companies going out of business. But yet, a lot of the products that I used to buy, like working from the retail side of things, I can't find them anymore, and they're being replaced with new brands, and so it's just like, okay, so what's going on here is relocation of manufacturing, distribution networks, all kinds. These reestablishment of the distribution network is really taking some time, but eventually it'll find its way, right? especially once you start lowering the interest rates and encouraging corporate management's willingness to invest for the future, right? So right now it's just not really that kind of condition. Why would anybody want to invest into consumers who are going to be hurting, right? Why nobody would want to do that. All right. Let's see here. Life is such a ride. Remember to enjoy it every day. Absolutely. Too much background noise, bro. Is there? What's going on in the background? I don't like. The only thing I can hear is my heat pump over there. It's barely running. All right, Mexico is sitting good now. Wealth inequality is showing itself in many ways and clouding the picture. No, wealth inequality is typical. That's what the money is, that you have a separation between the rich and the poor that continues to grow so long as new money comes in. And again, it's not like, it's when I hear people like throw the argument out there, it's just like, well, if we had a different type of, economy, or if we had a different type of official in here, and it's just like, no, it's just the way it goes. I mean, once you have an expansion of the money system and how that money starts to flow through the system, starts, separating the rich from the poor, once it turns off, everybody falls into poverty. I mean, it's just the natural course of things. Not that I like it or anything like that. It's just, I mean, you can just find examples of it happening throughout history. So rising unemployment correlates with the recession. With record low unemployment, any sign of weakness in the job market with rising rates causing pressure seems nowhere to go but higher unemployment. No, I totally agree. I'm still waiting to see it. See, like you're absolutely right with the statement, right? With the comment. That is absolutely true. What I question though is that from the very beginning, when I said, how this could be a non-recession recession, is that all these companies were massively expanded during the pandemic through incredibly cheap debt, right? So everybody was able to gorge. All these corporations were able to gorge on this cheap debt, and they went on these hiring binge, right? Everybody did. Everybody who had the PPP loans or whatever had to go on this hiring binge in order to keep the money without having to pay it back, right? So all of a sudden there was this huge demand for all these employees, which just sucked the available labor market. And so now all of a sudden labor is incredibly tight, unavailable out there, and all these zombie corporations are in existence. So now places like McDonald's is having a hard time finding employees, and everybody's talking about having a hard time finding employees because all these corporations are all of a sudden hired everybody along with a bunch of businesses out there. Now, as these corporations start to fail, as these businesses start to go under, people are going to start finding jobs at the lesser service industries, the ones that they didn't really want, but yet it's a job that's available. And if you're not making any money, you might as well go make some money. These jobs will begin to get filled. And so when people start to get laid off, instead of collecting unemployment, a lot of them are just going to start having to take jobs over at the service industry, which is paying higher wages now than they used to. So, what's the case? Like, what's going to happen? And there's a lot of possible what ifs, but what is taking place right now seems to be what I'm describing. Yeah, it could be that obsolete. It definitely that. Consequences of a dying currency. Simon, FYIY or FW or FWIW. I have no idea what that means. The most insightful market analysis I know of also made the point you just reiterated about how the dollar strengthens. Just not articulated as clearly as you. Oh, well, thanks. All right, drain the swampy. Trump went to Wharton School of Business. See average. Believe what you see, not what you've been shown. Believe what you hear, not what you've been told. Yep. Or believe half of what you see and none of what you hear. Right? Trump has common sense. That's all you need. Okay. There's a couple of things that are stated by Trump that I have that actually got me to the point that I was just like, dude, I am not a fan, right? Now, there's some things that he talked about prior to becoming president as he's on his campaign, like Trump, the campaigning, campaigning for president. I like that. I like a lot of the stuff that he said. But I also told myself that I was just like, man, if he doesn't pull through with a lot of this stuff, as far as like, talking about the Fed and dealing with that. I mean, he talked about firing Jerome Powell, but I look back at that and I was just like, dude, is that it? Is that really all you got? Is you want to throw out a bunch of like, a bunch of garbage saying about how you wanted to fire Jerome Powell. That's it. Like that was your entire battling the Fed. I was very disapproving of that. Like if you had Ron Paul in there, you would have actually seen somebody who was going to fight the Fed, right? It's not something I truly believe. But Trump wasn't going to do that. He's in there to play the game just the same as everybody else, right? I mean, what was it like? I love that Dave Chappelle making fun of him saying like, I know the system is fake and manipulated because I use the system. That's Trump. I mean, why would things have changed? Why would he want to create a situation in which that wouldn't exist? Like I don't get it. Like I really don't. I'm not trying to bash the guy. I mean, he might be a wonderful person to you or whatever. And I'm not trying to say he's like, a terrible person or whatever. I'm not trying to say that at all. I'm just not believing some of the things that he's talking about. All right. And especially when it comes to, wanting to type of stuff. I just don't believe it. And I don't believe that, for a second, any of that stuff. I think it's all hoopla, and his way of being able to manipulate the people into believing that there's no inflation and that the Fed should be printing money. Houses built with particle board burn quickly from the glue. Yeah, particle board does burn fast. And that's, I guess, like, I don't mean to get political on anything out there because I'm just not into it anymore. Like, there was a time I was really political, but I just found that most politicians do not behave within the confines of the Constitution, which then means they're no longer on your side. If they're not behaving within the confines of the Constitution, then they're not a president, right? They're your corporate leader. That's what they are. And whatever. I mean, I'm accepting of it. Hey, that's the way it is, right? It sucks. I'm a corporate debt slave just like everybody else is. I have a social security number just like everybody else. I don't behave like a sovereign citizen like, a true freedom-loving American should probably do. I don't do any of that, right? I am aware of it. I know it exists, but, really you have to function in this world and it's a hell of a lot easier just to say fine, that's the way it is, and I'm just gonna take advantage of whatever situation I can, for the best of my ability from the views that I have, right? And when I look at it from a political view, it seems very, very confusing, and no wonder why most people are so angry and upset about it. When you look at it from a monetary policy and how the Fed is conducting their strategy, it becomes very like, I don't know, like less stressful. I mean, it's still stressful because there's situation that is hard to deal with, but it's not like you cast blame. You just more look at it for the situation that it is. Like, I mean, again, I've kind of used the analogy. If you're on the boat and it's sinking, do you really point the finger at who caused the hole in the boat, or do you just start bailing it out? Or you just start working to try and figure out what it is you got to do to get back to shore? Right? Then once you get back to shore, then you can, talk about the story, you can throw all the blame around or whatever. But when you're in the middle of it, it's not time to like, cast blame around and stuff like that. It's a matter of figuring out what it is that you got to do. And that's really what the situation is. If you're casting blame, you're not working on what to do. That's the deal, right? You got to figure out what it is you got to do. All right, I just cut some Advantech flake board on a CNC router on Friday. All right, student loans are due in about a month. The new repayment program is as follows. You pay 5 to 10% of earned income above 225% of the poverty line, which comes out to about $32,000 a year. All right. UE, think you'll see in your lifetime AI displace jobs on a significant scale? If so, would UBI be necessary? I mean, that's a hard what if, right? That's a totally what if question. And I have to take on like kind of the same idea that the same analogy that I've used, many times as far as like the phone operators, right? There was a time, where there would be warehouses full of women who were literally phone operators pulling wires and plugging them into different connections in order to make these connections for long distance calls, right? And that's how this thing operated was through these operator channels. And when they switched and they no longer needed these warehouses full of women operating these switch lines, there was like a lot of talk out there saying, hey, all these women are going to go on unemployment. There's going to be this mass chaos, mass poverty from it or whatever, right? And I'm sure that was a lot of cases for a lot of the women out there. But you really have to think about like what happened shortly after that, right? Is that the women started going off and finding things to do with their life that really was more in line of following their passions, right? Because being a phone operator is not like, I mean, I imagine it might be somebody's passion, but I doubt that's most people's passion, right? But being a doctor, lawyer, politician, something like that is probably more in line with being a passion or a career passion that somebody could follow and feel good about. And that's what ended up happening after that. So when you displace somebody's meaningless job or unfulfilling job or just a job that can be done by a robot, what you are doing is you're freeing up that person to go and pursue things that they should really be doing with their life anyway, right? A lot of people say it's a bad deal. I don't see it that way. I see it as something as a good opportunity, right? I mean, you can look at it. It's all about the meaning you give it, right? You can look at AI and say, man, this is a terrible thing. It's going to destroy our lives. And then you'll conduct yourselves you conduct yourself in a way that you will be making decisions that will have AI come and destroy your life. It's really weird. You create your own reality, right? And so if this is what you feel, this is what you think, then this is the behavior that you start heading towards. That's what's going to end up happening to you, right? So instead, you're just like, well, okay, AI is going to come and take my job. That'll free me up to follow my passion. That's awesome. I'll look forward to the day, right? And don't look at it as a bad thing. Look at it as a good thing because it's happening, right? There's no like you can fight it all you want, but that's futile, right? It's not going to work. It's like trying to fight Mother Nature or something like that. It isn't going to happen. So it's better to embrace the change and then understand what the change is and how it is that you can conduct yourself to, have a better life because of it. Just like, being a phone switch operator. All right. Afternoon, Simon. Well, good afternoon, Glenn. All right. Pandemic stimulus made people retire early. High interest rate yields keep the smart ones retired. Then maybe they could sit and think about how they could actually contribute to making this world a better place. Find cure for cancer or build a spaceship or something. Yeah, let's cruise down and see what some of these comments here at the bottom are. All right. So many comments today. Thank you, guys. All right. I'm starting a 6x6 guerrilla garden when we get our next rain. If everyone does a small garden, that will go a long way to real solutions to the control grid. Yeah, and I mean, I'm imagining that guerrilla garden I imagine that's probably just like a small garden. Like when I consider guerrilla gardening, I'm thinking like, back in the day when, my buddies would grow weed in the hills, right? That's what I think about guerrilla farming. Is up there like, growing weed in secrecy. But I would imagine you're probably talking about just a small vegetable garden. It's probably more like a Frieden garden, you're thinking? I don't know, maybe not. Maybe you're talking about weed. All right. A garden on some land I don't own but is vacant. John, okay, good idea, John. I thought that was squatting. All right. Hot that like button or that thumbs up. Yeah, definitely. All right. It would be cool if America was still a frontier. Well, isn't there? I mean, I don't know. There was a time back in the day you could still homestead parts of Alaska. I don't know if that's still the case, but you might find your wish up there. Yes, exactly what I've been saying for years. Higher overall productivity through technology plus UBI, more people freed up to develop their passions. Yeah, I mean, that's what I see happening from technology, right? Now, whether or not that ends up being the case for America, because we may end up going into an economic downturn, whatever, I don't know. But as far as like the AI, the artificial intelligence and stuff like that, I'm not scared about it. Like, I mean, I can sit around and think of like some pretty scary scenarios that could come from AI, especially when it comes to, say, like, okay, let's say for example you use the Google Assistant, right? And Google Assistant wakes you up in the morning and says, "Hey, did you want us to go and rent you an Uber for your meeting that's going to be in about an hour and a half? And then along the way, should we stop and get you a latte that you like at your favorite coffee place?" And you're waking up and you're like, "Yeah, Google Assistant, that sounds great. What else can we do?" Right? And it just sits there and starts guiding you through your entire day, and you don't even have to think about anything. They're like, "Hey, that restaurant you like is coming up. Would you like to go there?" And I was just like, "Yeah, man. Thanks for even suggesting it. I don't even have to go and think about a place to eat. I don't have to think about anything. Guides me all the way through everything I do. I don't have to think anymore. I don't have to think for myself. I don't have to think about what I like or enjoy or whatever. It's making suggestions on what you like and enjoy and what you're thinking about and stuff, right?" So there's scary stuff from AI. I mean, I've thought about how the AI algorithm could work through this channel, right? See, if I think about it, if I'm good at spreading the message that the Google wants, like the Google algorithm wants, well, then it'll reward me with spreading my videos through the algorithm more. And by spreading the videos around, I get AdSense revenue from it. So they'll pay me to be good at spreading their information. But if I don't spread their information, they don't like what I say, then they don't spread it around. And then the algorithm falls. Right? And now I've tested this a little bit on the theories of it. I'll find some articles that are hot topic articles and maybe something that, I have an opinion about, and I will push those particular articles and those thoughts, those narratives out there and give my opinion about them, and I'll be amazed on how many times those videos will get picked up and spread a lot more than, say, going and putting a video out that is completely different from what everybody is saying out there, or contradicting a lot of what the narrative is. And at that point, maybe it's just because they're not as popular or whatever, I get less attention from them. Right? So even through this channel, understanding that that yeah, Google can manipulate even the individual who is putting out what is their own content, right? For example, this channel. Now, I would hope to recognize that happening when it does. And, believe me, like, there's been times where I'm like, man, I'm not getting the views. What do I do? And so I try to keep the content the same, but then put like some clickbaity title out there or something like that to try and get more views out of the channel. And the only reason why I would even want to do that is for the money, right? I mean, why else? A few thousand views in the comments is the same whether you get, 2,000 views or 20,000 views, right? The only reason why you would want 20,000 views over 2,000 views is if you were looking for the ad revenue from it, right? And just spread your word, spread the your theories and understanding of the economy. And that's really what I had to kind of take back in. It was just like, don't go for the views, man. Just go for the content that is original to you and your beliefs, and being authentic. And then, if you're good at it, then that's what will make you the money, right? Not whether or not you're spreading what Google wants you to spread. And that's hard, right? And so it makes me wonder how many YouTubers are out there just subconsciously following along with what Google wants because they're getting paid to do it, right? Even subconsciously, not even aware of it. Like I had to like sit there and think about that and go like, man, is that really happening right now? You know? All right. All right, UE was quite revolutionary with the right to human review in EU. Oh, I'm sorry, EU was. I thought you were. Sometimes I see EU and I think UE, and not realize it was the European Union that you're talking about. Revolutionary with the right to human review in GDPR. All right, what's good, pimp? Okay, of course the U.S. That's highly unlikely. Afternoon, folks. Shout out from Aurora, Canada. All right. Is that at the very bottom? All right. Crazy. All right, let's cruise up here and find some. Thank you very much for all the time and effort you put into sharing your perspective, Simon. Well, thank you. All right. Did I already read that one? Me to cashier. Are you still taking? Oh, come on, man. I can't. When you put anti-Semitic stuff up there like that, it makes it very difficult for the channel to not like have to delete those things, right? Because pretty much if you put out things like that, then it just screws the channel up, right? It makes Google not want to have my content spread and stuff, right? So, have your own opinions all you want, man. I don't care, right? But to actually put it in a comment and hear stuff like that, then it's actually damaging to the channel. I have to delete it, right? And if you keep it up, then I have to just get rid of you, right? So, have your opinion all you want, and I don't mind you sharing, but try and keep it so that it's not like anti-Semitic or racist or hateful or anything like that. GDPR, General Data Privacy Regulation. Oh, well, that makes sense. Thanks. I appreciate that. I didn't know what that was. All right. Michael knows America really is a corporation. All right. This is humans' way of dealing with undesirable content. Explain what's wrong and what are the consequences. So, moving back up. Okay. Until 2030, it will get worse every year. Smaller portion of the population will be working age, but you still have large demand from elderly retirees using resources and collecting pensions, etc. Yeah, and I believe that's going to be an issue right there. Something to very much consider and follow. In fact, I believe Alan Greenspan was actually talking about that very issue inside of the link, inside of the interview, and the link I leave down in the description of this video. I think that was actually something that he had brought up was the entitlement programs, especially from like the retiring population, and whether or not that's a sustainable thing to even cover. Um, it's very questionable at this point. All right. Thank you very much for all the. Oh, we already read that one. Okay, I'll cruise back down here to the bottom. Do you have vole problems where you are at? We don't have vole problems. We have mole problems, and yeah, we got a few of them. I have them out here in my yard, and they have a tendency to really tear the ground up. And at some times, like some neighbors get it really bad. Now I have a cat that does a pretty good job. He's killed one mole. We've trapped one. But still, like, I mean, Sarah has one in the garden. There's a molehill right out here that I can see, and I got a few in the front yard as well. So yeah, I got a problem with them too. Yeah. All right. The noticing is spreading. How are the turkeys doing? The turkeys are getting huge. These broad-breasted turkeys. I got a hen and a tom, and both of them are just getting monster birds. So when you feed them first thing in the morning, I should do a video of it. It is hilarious watching these two birds. Like it's as if they could not get the feed down fast enough, right? They are just starving as soon as they wake up in the morning, and it's because of the incredible rate of growth that they have. They grow incredibly fast, incredibly big. So. Well, so David, I totally get it, man. And like I said, you're totally entitled to your own opinions. It's fine. What I have a problem with is the YouTube algorithm. Like if we were on a different platform, I wouldn't care what would be stated in the comment section, but I'm responsible for the comment section of the channel. So it's just the way it is, right? I mean, you can have your opinions, just be careful on the way you state it, is all I'm saying. I mean, so I mean, you should start taking phone calls on these live streams. Oh yeah, that would be fun to do. That would be fun, like Mike Martins does. Okay. Is it maybe limit to 3 minutes, but at least can have a meaningful conversation? Yeah, that would be kind of fun. Do you think the famines and epic lockdowns are likely before 2030? I think there's going to be famines. Um, and I think that's probably not here necessarily in the United States. There's going to be food shortages, but it's going to result in incredibly high prices here in the United States, not necessarily actual shortages. The shortages will be outside of the United States. It'll just be reflective in incredibly high prices here. And that's where like a lot of people are kind of, calling me out for it. They're like, dude, what happened to this food shortage thing that you talked about? And I'm like, are you not experiencing, like, people keep talking about the incredibly high prices that they pay at the grocery store. Like, my wife's an incredibly good shopper. So, like, I ask her about high prices. She goes, yeah, I see them, but I just avoid the high prices and I go and buy the stuff that's cheaper or whatever. She's just really good at it. She loves shopping and she's really good at shopping for food. And so, like when it comes to the shortages, you've seen it happen like in eggs. You're finding it happening in rice, like India's experiencing it with the rice and tomatoes and stuff. What that does is it starts impacting the rest of the globe, right? The people who are sensitive to those conditions face the consequences of it. We're not necessarily sensitive to the idea that we're not going to have the availability of it. It just becomes sensitive in the sense that it is a global product that starts driving the prices up. So as the rest of the world gets deprived of the product, it starts increasing the demand, right? And then there's only so much supply and demand issues, and prices move up. How did you get interested in economics, Simon? Is there a story there? Well, yeah. I mean, when I was younger, I was always like into collecting money, like collecting coins. I collected all the wheat pennies I would find. I loved $2 bills. I would, I would, I would collect like the old money, like anything that I thought was like foreign currency or anything like that. So I was always kind of like a collector, like a kind of a coin collector, currency collector, and I wasn't even sure why. It was just something that was kind of like a hobby of mine as like even since a little kid. Um, and then as time went on, like I got really involved into politics. Like there was a time when I could have told you just about every single congressperson's name, all the senators, a lot of the possible bills that were in the works. I mean, I was very, very, involved in the whole thing. Um, Not like actively involved, but just more like, paying attention wise. Uh, and then 2007, um, I had purchased a house and pretty much immediately lost my job afterwards. Like I had it for maybe, I don't know, 7 or 8 months after that, but then pretty much lost my job. And it became very, very difficult to try and make the house payments. And so I'm trying to figure out like what's going on. Like, I'm just trying to figure out like why the housing market has turned, why it is that I lost my job, why it is that everything was so difficult. And, I saw like a bunch of stuff happening with like the Republican Party and blackballing, Ron Paul out of the debates and stuff, and that got me really frustrated with politics. And I'm like, screw you guys, I'm out of here. And so I just kind of abandoned politics altogether, and started just focusing in on the money printer, or not the money printer, just focusing in on money, right? And a buddy of mine had come to me, and he was just like, dude, you're starting to look at a lot more of like the interest rates and stuff like that. You might want to read this book. It's called The Creature from Jekyll Island. And I'm not a reader. Like, I am not somebody who sits around and reads books. I have like a reading disability that gives me about 10 minutes before my mind just shoots off and I'm no longer focusing in on the words that I'm reading. So that's where news articles and even the Fed speeches are just about perfect for me, because anything more than that is a little too much. But he had given me this book, and it was, I mean, if you've ever seen The Creature from Jekyll Island, it's huge. It's like, it's, I don't know, 400 or 500 pages or something like that. I can't remember, but it's a pretty thick book. And I'm like, dude, I am not going to read this book. And he was just like, well, give it a shot. You're getting interested in money and all this other stuff. I think you would find this book pretty interesting if you start into it. Well, he was right. So I started in on reading The Creature from Jekyll Island, and it took me about 6 months to read that book, right? Because again, I'm just not a reader. But I read that book, and after I read The Creature from Jekyll Island, that just said, okay, this whole thing is really pissing me off, right? Um, like there was there was some stuff that was really going down that just finally got me to the point that I was just like, I can't handle like the conspiracy theories. I can't handle all this stuff. It was just too mentally draining. I was losing everything I had. So I just started drinking a lot and just not focusing in on anything real. And I did that for like, I don't know, a good year and a half, I guess, where I was just completely checked out, like completely gone. And I had this interest, in economics, and I had, so a pretty good understanding of this point of like the Federal Reserve and mortgage-backed securities and the credit default swaps and the housing market debacle and all this other stuff. So I had clued in pretty good on like the Federal Reserve at that point, and but I was like in just this really bad drunk, right? And I just didn't care anymore. And I was heavily in debt and really wasn't making a lot of money and just whatever, I just didn't care. And I don't know exactly what happened, but I decided that it was just like, okay, I got to do something. It's like, I'm 39 years old. I'm about ready to turn 40, and things aren't going well for me. And I was just like, well, if nothing else, just quit drinking, right? Just give up the alcohol if you can do that. And so I did. Like I gave up drinking, and that was a deal for me, right? Giving up drinking was like a huge momentum booster, and it took a while to get there, but it got me thinking about like a better future. um, I was still heavily in debt at that point and still trying to struggle to make bills and make income and stuff like that, but I got to a point where I had eventually started the YouTube channel, and it took a long time from that, right? But that YouTube, starting the YouTube channel, is really what started driving the passion within me, and that's really when I started doing a lot of research. Now, up until that point, I had done quite a bit, and even for the content of the channel of when I started it, there was you could take a look at some of the earlier videos I did. A lot of them were on cryptocurrencies, and they're kind of lack of a better term, immature. But trying to come up with content for the channel, that started driving me into some heavy research. And so every day, even today, for the last 5 years, I research anywhere from 3 to 6 hours a day, reading different news articles, reading past Fed speeches. There was a lot of times I was before I was listening to a lot of other YouTubers, listening to their information and what they had to say, putting a lot of these different opinions together, forming my own opinions on a lot of the topics and situations that are happening out there. So really, I guess it was the failure of that house and driving me into depression that eventually got me out of it, that led me to start following my passion, and that was developing this channel and doing this. So that's really how it happened, was creating this channel and trying to come up with good content for the channel by doing a lot of research for it. And you do that every day for 5 years, you get pretty good at it. All right. Nothing wrong with protecting your channel, Uneducated Economist. Well, thank you, Rooster. I mean, that's all I'm trying to do here. I'm not trying to tell you how to think or believe or what. Even expressing your own opinions and stuff like that. Like I'm cool with it. Freedom of speech is everything, but I got to protect my channel. And like I said, if we had a different platform here, then you could do whatever you want. But unfortunately, it's not my platform. It's YouTube, and I don't want to screw it up. Michael believes I should get refund on my super chat because my message was misleading. What, Red Zone? No, I don't believe that. What did you say? I can't remember. What was that? UE, this is off-curve topic, but not curve to you. Lots of that. Japan rebuilds their homes. No, I thought that was a fine topic. Why should you get refunded for that? I mean, you can get a refund if you want. Here, send me an email. I'll send it back to you if you want, man. But I mean, I appreciate it. I thought it was a great comment. All right. I wonder what the true black swan will be. That is questionable. I mean, I thought really, I thought like the commercial real estate, and it still could be. I thought that would be like the major. And my phone's starting to slip here. What's going on? I thought it would have been like the commercial real estate. Like that, like absolutely driving the rest of the economy down. But I don't know now. I'm still kind of wondering what's going to happen there. All right. So good evening. Good evening, Brady. All right. For what it's worth. Oh, FWIW. I'll remember that. Gosh, sometimes I'm so dense. All right. Let's cruise back down to the bottom here. I'm just all over the place with comments today. I'm sorry if I missed your comment too. It's just there's so many of them up in here. All right, UE sounds like Noam Chomsky's wife when she spoke on how much researching he'd do on the daily. Yeah, I mean, it's quite a bit, and it it's not like it doesn't feel like work to do the research. It doesn't even feel like work to do the channel or anything like that. What feels like work to me is the things that I feel like I have to do for the channel. The moment that I feel like I have to do something, then it feels like work. Even something as simple as just like trying to push the content like out on other platforms or something. That to me feels like work because it's you know it I mean, obviously, it's like it's all about spreading the channel and putting work into the channel and into making that happen. You have to work everything that you do. But I didn't really want the channel to be something that was work. I wanted to remain like my passion, something that was like my fun hobby that could pay me to do it and not feel like I have to make this happen. And if it's work, then generally work means that you have to do it. And when you do that kind of thing, you change the energy of what you're doing into it. And I can feel that happening with the channel itself. So that's one of the reasons why I wanted to back away from the idea of doing sponsorships. Not because I don't want the money, I want the money, and I mean, my family could use the money. We could always use money, right? I mean, it's not like I have, tons of money or something like that. So, working to try and get more money is what the whole goal of everything that we're doing here, right? Is to try and get more. But if it changes the way you feel about what you're doing, then maybe it isn't something that you should do. And that's what I felt like when I did the sponsorships. I just felt like I wasn't putting out the content that was necessarily original to me and what my thoughts and opinions were. Although that's exactly what I was doing with the sponsorship videos, is I was being what I felt like was true and authentic to the video. But it just gave me a feeling that wasn't the same as when I'm just putting out content because that's what I'm feeling is what I want to put out for the day. When I do that, I feel like I'm being much more authentic and original, and so that's what I'm trying to stick with. And if doing sponsorships changes that, then I'm going to have to pass on doing sponsors. That's why I'm really trying to do things like the Patreon. I'm not going to promote or push a whole lot of the Patreon yet until I actually get into the habit of writing, right? I have, I think, 21 Patreon members right now, and so they have access to the writings that I do. It's not a whole lot yet, but once I start making those things a lot more popular, then maybe I'll become more of a writer well, in addition to what I'm doing here. And that would feel more of like me following my passions, right? And doing writing and putting it on a platform like Patreon, which I had a few people give me a hard time for. They were like, "Oh man, I thought you were above that kind of thing." And I'm like, "Well, what's wrong with Patreon? I mean, maybe they have a bad name for something that I'm just not aware of." But to me, it was, a paid membership for content that I'm producing that for the most part I'm regurgitating right here on YouTube for absolutely for free. Right? So, I mean, it's just like the only difference is by going to Patreon, you're supporting my channel, you're supporting the Uneducated Economist, and you have access to some of like my writings, which is like something I'm trying to become more in the habit of doing. So I don't know. That's the way I'm trying to promote myself, or at least sponsor myself. At least is through the channel itself, and the members of the channel, supporting the Uneducated Economist. And we don't need outside people. We don't need sponsorships from gold companies or anything like that to try and make money with it. We can just do this all on our own. And I feel that is really where I want to gear the channel towards. And Patreon may or may not be what does that for me. It's just what I'm doing right now because it was a platform that I could post some writings to. That was the only reason. And all right, Yui, what are the thoughts on mutual funds? I well, I mean, I guess if you find the right ones. I mean, I'm not much of an investor, so I would have a hard time like telling you whether or not there's a good or bad one out there. I mean, that's not for me to judge. It's really about, your understanding of them and who you trust out there as far as putting those funds together. Right now, I'm not a fan of investing much into the stock market. I buy four stocks. There's four things that I buy, and I do occasionally pick them up even now. I buy Coinbase, which has done very well for me. I buy Altria, which is Marlboro cigarettes and Anheuser-Busch. I buy the Vanguard ETF, total stock market, and I buy the Vanguard ETF of the Russell 1000 growth stocks. And those are the four positions in which that I have taken inside of the stock market. I've did $50 purchases every week throughout 2019, and then I do an occasional $50 purchase just when I feel that I have the money to put into it. So it's not like any kind of regular thing that I'm doing right now. I will hold off until I start seeing the 5-year, 30-year spread start to widen. At that point, then I'll probably start investing a lot more back into the dollar cost averaging of $50 a week. And that's kind of my strategy. Whether it's right or wrong, I don't know, but that's what I'm doing. And again, like that might not be a position that you want to take at all. Especially now that I've already been in these positions for a long time. So like taking them on now may not be the best strategy for you. You have to really consider that for yourself. All right, minimum wage is rising. No one is hoarding the dollar. Yeah, they are. Just look at it. The rich are hoarding dollars right now. You look at corporations sitting on a lot of cash. The rich are sitting in a lot of cash, or in cash positions. Like when I say that, it's like positions in which that they could, turn those assets into cash very quickly. Those are the two places. So cash-like assets. Total respect your attitude on sponsorships. Well, appreciate it. And like I say, I got to do the work, right? I got to put the work into the writings if I want to get more Patreon members, and I'm going to do that. And once I have a nice, substantial amount of writings out there, then I'll push it. I'm pushing it kind of right now, but we're talking about it. So, but I would be pushing it more on my channel, on the videos every day, stuff like that, because I would love to get like the memberships. I have memberships here on YouTube as well, and I'm not doing very well as far as providing like any kind of real like advantage to being a member, other than I give you access to the videos before anybody else does. Occasionally I will put out a video that is just members only. I keep promising that I'm going to do just member only videos, but I'm having like so many things going on right now that I'm having a hard time even getting my regular content out, let alone a special video just for the members. But I guess if I want it to happen, then I should probably do it, right? So I should start doing more member videos as well. But that's kind of what I'm going to do to try and like bring in more revenue for the channel to monetize it. Is instead of doing sponsorships, I'm going to try and just be more of sponsoring myself, and promoting myself and some of the other things I have going on. My plants look happy. Sarah's garden looks really good. All right, Don Isaac, minimum wage is rising. They're starting to talk about giving a universal basic income now openly in government meetings. Minimum wage will never keep up with de-dollarization. Yeah. All right. Japanese kids are young as age 8 take public transportation to school. Does Japanese culture come from the way they value land? What if America rebuilds their own homes every 20 to 30 years? Well, I mean, they have a much different culture and much different respect for themselves and, or, for each other, I guess is what I say. Like, Americans, like I see it, some people are very polite to each other. Other people are just very, not courteous at all. Like, I mean, it's like some people are quite rude and arrogant in their behaviors on a daily, on a daily, you know, on a daily basis. Um, my dad he traveled to Japan and he said he loved it there. He said one of the things that he noticed about the cities is that they were very clean and that the people's behavior with their litter, like their garbage. He said there was no places to really throw garbage away. Everybody held on to their wrappers or whatever garbage they had, and then when they found a place to properly put it, then they would empty out and get rid of the garbage. Now, that's not necessarily something that that really happens with a lot of people. I'll see like you know, people like take things out of the package or whatever and just leave the package for somebody else to deal with. And I see that happening quite a bit. And I guess that, like, just that small little thing like that is like one of the major differences that my dad noticed. Anyhow, moving on. All right. Let's see a garden and bird video. Okay. Well, yeah, maybe someday I'll show you guys. Well, I've showed you guys the turkeys before, so. Oops. How long have we been at this? 2 hours. Alrighty, guys. Well, how about I give it another 10 minutes because I need to go and do some stuff around here because we've been gone all weekend. So, and then I got to go call bingo later this evening. Which, again, if you're going to be in the Astoria area, come and check out the bingo game over at the Workers. Starts at 6:30. All right, to me, it's just a matter of support to your channel and your content. Well, thank you very much, Glenn. I really appreciate you being a member of the channel. Shows the basketball setup. Oh, it's just one of the quick hoops for the Freddy. It's folded up right now, but it's just kind of like ones that you see at the arcade. It rains all the time here, so it's just like it's hard to find things to do that are inside and dry. So we bought that basketball hoop for him and his buddy Matthew, the neighbor kid, to play with during the stormy seasons and stuff. Simon for Senate. Yeah. Oops. Uh-oh, what happened? Where'd you guys go? Oh, how do I get you back? What's going on here? Oh, I see. I switched it around. There we go. Okay. Oh, I did it again. Come on. There we go. You guys see my Traeger there for a second? I got the camera sitting on the Traeger grill. That was funny. Uneducated entrepreneur. Hey, I love the name, man. That's awesome. How does your patio look? My patio, it doesn't look too much unlike what I just showed you. It's open to outside there, but yeah, it's kind of like this cover right here. And it's actually not really attached properly to the roof, so I do still have to change that. I never did fix it. I kind of temporarily dealt with it for now, but it really should have been replaced this summer. Maybe I can still get that done. I don't know. I got so much stuff. All right. Waving hello to you from the Northeast. Well, thank you so much. 345 Farm. I really appreciate you, man. Dude's out sitting in his garage. It's probably 120 in my garage right now. Central Valley, California. I'm getting sick of it fast. My phone keeps slipping on my little stand that I built here. It's not much of a stand. It's more like a wadded up piece of paper. There we go. How's that? Is that a little better? Cutting the top of my head off. There we go. All right. Any tax tips for YouTubers? No. I need some tax tips. If there's any YouTubers out there who understand like good tax tips for YouTubers, please send me an email because I need to figure that out. I appreciate what you share with us. Thank you. 345. Oh yeah, we talked that. Thank you. 345 Farm. How do you flatten a wooden log so I can use it as a table surface? Well, if you're gonna need a mill is what you need, and whether you can even use like those chainsaw mills, but and I've even seen people just like free cut with a chainsaw. It doesn't turn out too well. Like you don't generally don't get a nice flat slab out of it, but you need a mill to make it happen. Super cheap cell phone stand. Yeah, I really should. My wife has one, but she was using it to make her videos. Yeah, I tell you, Dishes Every Day has got a YouTube channel that is really doing quite well. We're just absolutely blown away by how many views that her videos are getting right now, and they're just simple ASMR videos, and it's the vacuuming ones that are really catching a lot of attention. I mean, she has a couple of them now that are pushing 5,000 views a piece, along with a few dozen other that are pushing close to 1,000 views. A playlist that's up to 1,000 hits on it, and this is all from just her just doing the regular work around the house. So I have the belief that one day she will have a monetized channel that will be, earning her money to be posting videos. We're really looking forward to that. So if you haven't been over to Dishes Every Day, go and show her some love. Go over to Dishes Every Day and subscribe to the channel, and give a few of the videos a like and a comment, and that would be really cool. A router on a sled will make a tabletop. Yeah. All right. Good for her. Yeah, she's really happy about it, and she's putting a lot of work into it too. I mean, it's, I mean, the regular chores that she just does around the house are a lot. Yeah, I mean, she does them every day, and she's constantly doing, stuff around, and just putting the, setting up the camera and recording it. It seems to be doing it. I mean, I'm quite proud of her and the channel for being as dedicated as she has been. I mean, you're talking dishes. She did dishes videos like every day for like a year and a half. And once she started posting a variety of videos is when the channel really started to take off. Alrighty, guys, it's getting late, and well, not getting late, but it's getting late for me. I'm gonna have to go and do some stuff around here and get ready for bingo. But thank you all for being here. This has been a one heck of a fun live stream. I think we talked a lot about the yield curve and kind of broke down a lot of our ideas about what's going on with the yield curve and where interest rates are headed, where the Fed's headed. We have 179 watching right now with 228 likes. Thank you everybody for hitting that like button. We have $44.98 in super chats. You guys are always so supportive of the channel. I can never thank you enough for all the support that you've given, not just through the donations, but through all the kind comments and just support for the channel in general. Every time that you mention to a buddy about the Uneducated Economist, that's another subscriber that I have out there, and we've gotten it up to 125,000 subs right now, which is something that I never thought that I would ever have in my life, but yet here we are today. So I'm looking forward to, what the future of the channel has and what it is that we can do, and maybe someday here in the future I'll be a writer. Let's read a couple of more comments before I go. Average American home is 46 years. I think building supplies, banks, and state laws should support rebuilding 20 to 30 years. Japanese culture comes from applying trades as it was in America before. Yeah, I could see. Oops, where are you guys going? Yeah, I could see where Japan has just kind of like just a different mental attitude about everything out there, and just trying to hold my phone up. Here we go. Okay. But yeah, I could agree. That would be great. But I mean, I think that would take again, I think that would take an attitude adjustment coming from the people themselves. I was reading an article. I don't know. These things just come into my head, but I was reading an article about this. I don't know. This like award-winning economist out there. I can't remember his name. Some Turkish guy. But it was in Fortune. I think it was through Fortune.com. I was reading this. Anyway, he was talking about one of the major problems with the production of things here in the United States, like the productive capacity of the United States. He said one of the major problems was knowledge diffusion. right? And basically saying that, like, because everybody doesn't share their ideas and how it is that they get things done, then that makes everybody less productive. Because if they had this ideas or this knowledge, then people would be more productive because they would have the more efficient ways of doing things if we were able to share this knowledge, right? And I think that's kind of like what his idea was. My argument to that, when I read this article, was just like, well, then why would I even try? Like, what is it that's out there that drives me to even come up with new ideas, products, efficiencies, anything out there, right? It's money. Money drives it all. And if there was a system set up that says, hey, you've got a really good idea, but if you capitalize on it, we're going to punish you and take it away and give it to everybody, then why would you try? Like, where's the incentive to try inside of that? You know, to know that as soon as you get there, they're just going to take it away from you. Right? And that doesn't leave a whole lot of room for like innovation, right? Because the moment that have this new invention for something, it gets taken away from you and distributed to everybody else. It's a horrible idea. Now, it might be great for production, like, yeah, you can increase production that way, but it's going to be a terrible idea to get people to being more efficient and coming up with better ideas, because you just lose it to the redistribution of knowledge, I guess. Enjoy your bingo. Thanks. Yeah, I will. Thank you. Yes, Japan has a different mental attitude, and Redizon has no clue what he is talking about. No, he does have. No, that's not true. He does have an idea of what he's talking about. I think it's just the idea that, trying to get people convinced to start doing it that way is where the difficult time is going to come in, right? Like, if Japanese culture was to all of a sudden start being more prevalent here in the United States for whatever reason, that you might find people being more in the habit of rebuilding their homes every 20 to 30 years. But, it's just, and I would say the opposite would happen in Japan, that if all of a sudden Japan starts taking on a lot more of the American attitude towards things, then they might find where their properties don't get built or rebuilt every 20 to 30 years. Thank you for spending time with us. Well, thank you, Pamela. Thank you for being here. Good evening, Yui. Thanks. Well, good evening. All right. Hail Nighter. That was from Dishes. All right, Simon. Inventors and innovators are rarely the richest people in the world. Yeah, no, I agree. And that's where, and that's what makes it very difficult, is because most people do invent and do stuff like that because they have this idea that it's going to benefit them in the future, right? I mean, usually, some people just want to invent things just to make them happen. I mean, there is that. How long should someone keep a secondly job? I'm an electrician in the morning and I work at Lowe's at night. I would say forever, as long as you can. Take all that secondary money and invest every dime you can until you're ready to retire. I'd say do it forever. Don't not do it. All right, right. It's a really good point, Simon. I never thought of it through like that. I forgot what we were talking about. I'm sorry, man. All right. I have always found my U.S. friends are much more free with their knowledge. My Canadian friends are much more guarded. Huh. Interesting. I know, like for me, like anytime I was ever on a job site, I want to share as much knowledge as I have with as many people as I can show, because the more that people can do what I can do, the less that I have to do, right? It only makes my job easier if everybody around me knows what I know how to do. Now, granted, the less people who know what you know how to do, the more you get paid, right? Because if you're the only one who knows how to do it, then you get to charge a lot, right? But that's not the way I see things. Like, personally, when I'm on a team, when I'm with a crew or whatever, I want everybody to share in the knowledge too, so that we can all work as efficiently as possible. But again, it's the smartest person in the room, the one with the most knowledge, the one who understands, the one with the skills. They're the ones who can make the most money, or should be making the most money, whether that happens or not. All right, guys. I get stuck out here, and I will never end if I don't just end it. All right. Thank you guys for being here. Famous dessert in Astoria area. Famous dessert in Astoria area. I like Freet and Scoop. Freet and Scoop is an ice cream place, and they have like some really unique ice creams in there. Like they have one of my favorite ones is God, I can't remember the name of it now, but it's made with Earl Grey tea, and it is like about the grayest ice cream you could ever imagine. It's like it doesn't look appetizing at all, but that is a really good one. And then I forget they have some really other really unique flavors that I thought were pretty good. And then they also served fries with it. And I thought that they were closing down, so I'm not sure if they're still open right now or if they plan on moving or something like that. But that was a really good place to go for dessert. Um, I'd imagine some of the restaurants out there probably have some pretty good desserts, but I liked Freet and Scoop. That was a good spot. All right, guys, my phone just won't stay in the place, and you guys are all over. All right. Or I mean, I'm not all over. Getting sent all over by my camera. There you go. Okay, I'm done. All right. Uneducated economist. You guys let me know.